All right, everyone. I am on the road today, out in the field, but I had to take some time to do another video about dividend investing. I want to discuss a concept today that I like to call my line in the sand approach. This is a really helpful approach. It's a really helpful strategy. I think it will apply especially to the newer investors out there, those of you who are just getting started with dividend growth investing, but also those seasoned veterans like myself, quite frankly, who have been at this forever. And so this is a video about staying motivated, staying in the game, getting money deployed, moving incrementally, step by step, towards one's goal, towards one's financial goals. And I'm going to talk about a bunch of stuff today. I'm going to talk about stocks that I own. I'm going to talk about something I'm going through right now in the financial space, this financial sphere of our family, just in terms of planning for my daughter's college education. That's something I want to discuss today because I think it's really relevant to this line in the sand approach. A lot of wisdom in today's video, so let's get started with another dividend investing video. So you guys know that I have these project stocks, if you will. I have a few stocks that I've bought literally within the last 2 years that are smaller positions, but I buy them because having these new smaller positions, it motivates me. It motivates me to get money out of the account that I might just spend it on stuff and get it into the account, the investment account, where I'm actually using the money wisely. It's growing, it's spinning off cash flow in terms of dividends. And so I have a few of these stocks. I have General Mills, for example, which I started out just within the last few years, and now I've brought it to full size. AbbVie, which I've bought really recently. This is a 2019 stock, and now it's reached full size. But I have a few others. Chubb, Apple, and PPL Corporation. Those ones, they're all still smaller. They're kind of in the portfolio, but they're smaller positions. I have a lot of work to do to bring them to full size. And the reason that I like these project stocks is they kind of serve a purpose. They serve a purpose of, one, diversification. I love a broadly diversified portfolio because in the current political landscape, anything can honestly happen out there. And because I am using dividends to pay my bills, and eventually they will pay all of our bills, all of our family bills, I don't want disruption to income, to my dividend paychecks. I'm receiving 173 of them right now, so I like to diversify. But the more important role that these project stocks play in the portfolio is they constantly get me thinking, even subconsciously, about finding more ways to get money deployed in the portfolio. We've talked recently about dividend stocks versus non-dividend stocks. I'll link in the description below to a recent video about that. There's this dividend irrelevance theory. Putting the theories and such aside, talking about investing overall, one of the things that has always been important for me personally is getting money to work. It's not even about how much return I can get on the money. Oftentimes it's about getting money out of the spending account, out of the account where I'm tempted to spend it one way or another, again, potentially subconsciously, and get it into the investment account. And so these project stocks, because they're kind of smaller, they're newer, I kind of see them in my investment account and I'm like, oh, okay, I got Apple. It's not at the right size. It kind of looks messy because it's real small, everything else real big. I better get more money into Apple. And so they force me consciously and subconsciously to get more money going. Another way I look at it is it's kind of like a line in the sand. When I deploy money in a new company like PPL Corporation, it's literally like I'm on the beach, I take a stick and I draw a line in the sand. And it's kind of like, hey, it's just the first step of many. It's the first step on a very long journey of where I want to go. But by taking that first step, deploying that small chunk of money, it gets me focused on the long term. It's just like saying consciously and subconsciously, hey, Ian, you're dedicated to PPL Corporation. Ian, you're not going to have all the money in PPL right away that you need, but by deploying a little bit of money, it gets you thinking, what are some clever ways to earn more money? What are some clever ways to save more money? What are some ways to get more money in PPL? And so for me, honestly up-leveling the conversation to the next level. One of the reasons that I've always enjoyed just buying individual stocks and having project stocks, if you will. Some people may accuse me of being too diversified. I don't think I am. I'm at 42 stocks. That's not too diversified given the scale of my portfolio and my reliance on dividend income. But putting that aside, just having these newer positions, even if I compromise some performance potentially because, hey, is PPL as good as my number one favorite stock of all time? Maybe it is, maybe it isn't. Probably isn't. It's a lower risk stock, lower return, but it gives more cash flow in the short run. It's a cash cow, it's a utility company. But the benefit of having it that I think, quite frankly, overweighs even performance is the fact that, hey, I draw a line in the sand, I got a project stock. I know now as a person, as an individual, from a financial picture, I'm going to chase after that stock and chase after getting it to size, put more and more money in it. And subconsciously now, I'm going to be thinking about that every single day. I'm going to be thinking about that when I sleep at night. And so that's one of the reasons I love this line in the sand approach. Now, there's a psychology to all of it. There's a stock right now that just got downgraded. My friend Sam shared this on Twitter just a few minutes ago. Thank you, Sam, my man, my friend. He shared that Clorox just got downgraded. This is my number, forget which one. It's one of my top 10 favorite stocks. I think it might be number 5, somewhere around there, somewhere around number 5. But I love Clorox. I've been waiting for it to go on sale forever. The only challenge with these project stocks is, hey, Clorox is a big position for me. I want it to be bigger. And now that it's starting to come down, if it comes down a bunch, I just have to be careful to also prioritize my money and not just get too caught up in the project stocks, to think about the other stocks as well, the main core stocks in my portfolio. And that's why I set goals at the beginning of the year, to be honest. That's why I set goals, strategic goals. And one of my strategic goals this year is top 10, top 15 stocks, stay focused on the core stocks as well. And so that gets me thinking subconsciously as well. But basically, I want to bring this back, practically speaking. You're thinking about getting started, or even you have a portfolio and you got a bunch of stocks, you're kind of in analysis paralysis. Which broker do I go with? Which stock do I buy? Should I get started? My preference always as an investor is just to do it. Just get started, because when I draw a line in the sand, it says something to me. It sends a message to myself, to my subconscious, to my conscious that, hey, I'm now started, and it's the first step. And it's kind of with anything. Have you ever procrastinated on something in your life? I find this all the time because I can be a procrastinator. But it's funny, once you just take that step to start, it's so easy. The rest is so easy, but it's that analysis paralysis. It's the thought behind it. It's that analysis that can slow things down. And so for me, by drawing a line in the sand with investing, and by having these project stocks as well, it's just one way that it kind of tricks my brain that it's like, oh, now you're started. Yeah, you have a long way to go, but the rest is super, super easy. And so oftentimes it's about that first step. And so if you're out there, you're questioning yourself, you're kind of thinking, oh no, the market is near an all-time high. Which stocks? Which strategy? Which broker? Personally, what I've always found is useful is sit down, weigh all the options, put a lot of thought and analysis into it. But at the end of the day, there has to be a line in the sand at some point. There has to be. And what I found, that's great for newer investors or earlier PPC, Ian. But even now that I've in this 20 plus years, I still like to reinvent myself. I still like to have those project stocks because it makes me feel the same way I felt when I first started dividend investing. When I go out and I buy Chubb and I have barely any money in Chubb, it makes me feel, hey, Ian, this is like what it was when you first got started with dividend stocks. And by tricking myself that way, by having these project stocks, it allows me to still embrace this line in the sand mentality. It allows me to embrace this excitement that comes with embarking on a new journey. It allows me to embrace that I'm taking a first step and I'm going to take that step, so I trick myself into not wasting money. And so I want to share kind of another take on this same line in the sand approach that I'm facing right now that really I think will resonate with folks out there, because everyone here on the internet I see sometimes is kind of getting into analysis paralysis, but they're doing it on like their first few $100 or their first $1,000 or $5,000. The way I look at it, to have meaningful cash flow, meaningful success with dividends, quite frankly, all of us here should be shooting for big portfolios. I'm going for multi millions, but I want everyone here in the community to be thinking big. And so when you're thinking that big in the long run, it makes it easier sometimes it makes it intimidating, honestly. So that's the hard part, getting over that. But that's why I draw a line in the sand and I just go for it, because it gets me on that journey. But also when you're thinking that big, it does make the analysis paralysis a little bit easier, because it's like, hey, if I'm trying to amass a multi-million dollar portfolio, hey, what's wrong with just deploying 50 grand, 100 grand right now? Hey, maybe the market is towards a peak. But it kind of puts things into context. It's just a first step on the journey. So I want to share, though, something that I'm dealing with right now, and that is my daughter's college fund. So I already have a college savings fund for my son. He's a little bit older, but my daughter, she's younger. I hadn't started one for her yet. And so it was about time. It's about time, hey, Ian, get started planning for your daughter's college. And so I started just looking at numbers, and I'll share some of these on the screen. I went to Stanford. That's what I'm representing today, representing Stanford alumni. I studied computer science and economics. I was co-president of the investing club there, a student-run investing club. I've had my passion for investing forever. Represent Go Cardinal. I love Stanford. And I still live near there, so I'm so blessed. But I was looking, hey, if I want to send my daughter and my son to Stanford, hypothetically, or a university that is of a quality, similar experience, what would that cost? And so I looked. Stanford, thankfully, on their website has all the information, and I'm going to share it on the screen. They break it down, what it would cost, and they break it down by tuition. But it's not just tuition, as we know. We have to feed these children. We have to they're not children by the time they're in college. They're young adults. But we have to, pay for their books and this and that. And yeah, they can have a job on campus or something to help out. But look, it's expensive. Basically, what Stanford estimates right now in the current year is it's about $74,570 per student per year. And that does not include any financial aid they would receive. But my children are not going to be eligible, most likely, for financial aid unless there's some kind of maybe they become sports stars or something like that. But right now I'm planning, hey, no financial aid. I'm just going to pay. And so what it comes down to actually is the tuition itself is $52,857 per year, but there's those other expenses I was mentioning, and Stanford lines them all out on the website. I think that was really helpful to share that with parents, that it comes out to $74,570 per year. Now, I don't want to get into a debate here whether, hey, is it worth going to college? Is it worth the money? This and that. Personally, I'll tell you, I believe it is. It was the best years of my life. I learned so much there, and it goes beyond the academics. It's into personal growth at that point. And the growth that I experienced by going through that journey at Stanford, it was unparalleled. And quite frankly, the academics were unparalleled too. And in computer science, it was tough stuff. And it set me up for a bright career and just gave me the skills I need to overcome challenge in life, because it is challenging to simply pass some of these computer science courses. Shout out to my friend Joe, who watches these videos sometimes. We were in a class building a compiler, and there was one week where I was pulling 7 all-nighters in a row, and by the end of it, I was basically hallucinating, and as was my friend, but we made it. We did it, my friend. And so mad props to my lifelong friend from college, all the way back, Joe. You are the man. And so if you multiply, though, like let's say your son or daughter goes to Stanford for 4 years. If you multiply the $74,570 by 4, it comes out to $298,280. You're basically looking $300,000 to send a child these days to Stanford. And so I want to do that for 2 children. And again, maybe they don't go to Stanford, maybe they go somewhere else, but I'm assuming like a private university going to cost that much. Hey, maybe they want to go to public university like UCLA, go Bruins, or something like that. That's great too, and that would save some money, but I want them to have that freedom, those choices in life. And if they are lucky enough to and work hard enough to get into Stanford or similar university, I'd like them to have those options. Anyways, what it comes down to is that's a lot of money. And I have a friend who's a financial planner. He's actually like a life insurance guy and financial planner, and I'm really a fan of this guy. And I actually talk to him for his opinion quite a bit on certain elements of financial planning. Dividends, obviously, I don't. I share my dividends with him, and I think he's a fan of the dividend strategy and understands what I'm doing. I have some other friends in the area of financial planners. One of them is a subscriber, and we had lunch, and he's like, I love your videos, and I share your dividend strategy with some of my clients. This is coming from a financial planner. And so mad props to the financial planners out there, by the way, that assess the needs of each individual differently and recognize that some individuals are well suited for dividend stocks. And so it's not for everyone, but for some individuals, it's a strategy that may make sense. So I love my financial friends, my financial planner friends. But my friend who is the life insurance guy, what he actually recommends and shares with his clients is, hey, if you're planning to send, and he's a Stanford buddy, by the way, if you're planning to send your kid to Stanford, there's a lot of inflation in the services sector, not necessarily goods. Like, hey, you buy a LCD TV, prices going down. But I'm talking about university, prices are going up and to the right. And so by the time our kids go to college, it's not going to be $298,280. It's going to be $500,000. And so that is a pretty scary goal when I'm looking at that 2 times. And so now I'm looking $1 million to send my 2 kids to Stanford. And so what I have come to realize, though, is I just can't look at it that way. And this is above and beyond my own retirement, my wife's retirement, us living off of dividends. In addition to that, we got to save $1 million for school. And so we start thinking like this, and it's like, hey, that can be a little intimidating. And this goes back to my earlier point, to have meaningful dividend income to live off of, you're looking in the hundreds of thousands or millions. But it all starts with that first step. It all starts with that line in the sand. And the compounding effect is huge. The compounding of reinvesting dividends, of adding more capital, of dividend increases, and quite frankly, not even talking about dividends, just talking about any strategy like indexing or mutual funds. It all compounds the same. There's a lot of compounding that goes on in the stock market. And I would say it's not only the compounding of the financial forces, it's the compounding, quite frankly, of you and me. When we take that first step, we get that line in the sand. We let the analysis paralysis, the fears, the things that are keeping us from going forward, we put them aside. That compounds. It's just like procrastinating at work. If you take that first step, the next step, the next step, the next step, it all compounds. Anyways, let's just say I need to deploy a lot of money for these kids to go to college. Well, I drew a line in the sand recently, and what I did is I opened the 529 plan for my daughter, and I deployed $5,000. Now, this is 1.7% of the total amount, and that's the non-inflated $500,000 amount. It's 1%, quite frankly, if I need the $500,000 that my friend is saying. But I'm just saying if we need the $298, $280 going by Stanford's website, it's 1.7% of the goal. But you know what? It's 1.7%. I took the line in the sand. I took the first step. I'm building the momentum. That momentum of investing. I talk about this on my channel in the early days. Shout out to the OG Thug Life investors. Been around here since the early days when I was doing this stuff, a lot less polished than now. And I know this video isn't too polished. I'm doing my Thug Life car vlog because I'm literally on the scene doing my real estate development today. But shout out to those who remember my videos about momentum. But there's compounding that goes beyond the dividends, the capital appreciation, the dividend increases, the new money infused. There's the momentum compounding, and I'm building momentum by literally taking the first step. Now, 529 accounts, by the way, for those that don't know, they're really cool because once the money is in there, it grows tax-free. And when the student pulls it out for qualified expenses related to college, it comes out tax-free. In some states, in fact, there's a deduction in the tax year for money that goes into 529. Unfortunately, that does not apply to where I live, which is in California, but I still love 529s because of that reason. Quite frankly, the other reason I like 529 is it just gets the money away from me. I'm a dividend guy through and through, but I'll tell you, for the 529s, I look at them a little bit differently. This may surprise you, but I want to share a different perspective here. I could have kept that 5K. I could have put it in some dividend stocks, but then it's in my wife and I, it's in our sphere of influence. And then you start thinking, well, Are we really going to use it for their education? Are we going to use it for living expenses? It muddies the water. So for something like a 529, I want it separate. I want it in the 529. I want to be a custodian of it, but I want it to be in my daughter's name. I want it in a way that I can't easily get it out for something else. Quite frankly, I'm one of these people where if I have money sitting around, I'm either going to spend it or I'm going to, quite frankly, invest it in dividends. And so that 5K, I had to just get it out. Got it in the 529, out of sight, out of mind. And I'll tell you, the 529, it's not the most exciting investment vehicle that I went with. I went with a mutual fund. This is going to shock you guys out there. I'm a dividend guy, but I put in a mutual fund, and it's one of these target date mutual funds. So they kind of go more aggressive stocks in the beginning, less aggressive in the middle. By the end, it's all bonds and cash when you're kind of the last few years, the student doesn't want to take on risk. And so it's a target date mutual fund for the year that my daughter will go to college. And so I understand that this target date fund will underperform the market. It may drastically underperform the market. This goes back to my last video. I could not care less. I'm not trying to outperform the market. I'm not trying to keep up with the market. I literally want this money in this vehicle so it's not tempting for me to spend it, so I can put a stake in the ground, so I can draw a line in the sand, and so that, quite frankly, there's other considerations too. It's in the sphere of influence of the financial planner I just talked about. Believe it or not, even Thug Life Ian, been investing forever, got a huge portfolio. Dividend stuff I do myself, but when it comes to certain areas of our personal finances, I have no problem paying for help. And this is one case where if something, God forbid, happened to me or anything like that, I want this under the financial advice of someone I trust, someone that knows my family, someone that can see it through and make sure it gets to the right place, which is for my daughter's education. And so for these reasons, this is what I'm saying. I said some of this in the last video. There's so many reasons that total returns is not everything. There are other considerations in life that are more important than total returns. And in this case, it's literally getting it in the 529, getting it out of my account, getting it under the umbrella of someone who is a friend of the family and who can see it through if I need him to see it through. And so that gives me the peace of mind to sleep at night. And ultimately, what I love most about personal finance, dividends, investing, all that stuff, is the ability to sleep at night. That's why I invest in these dividend stocks. It helps me sleep at night knowing I'm getting 174 paychecks per year. Nothing helps me sleep better than that. I got a huge chunk of cash flow coming in, reinvesting most of it right now, 42 stocks, but reinvesting most of it because I want it to balloon bigger, but I am using some of those paychecks. They're starting to actually rack up in the account now to pay bills, and I love that. And so I wanted to share that story, though, because I think there's kind of multiple takeaways from the story. The takeaway is even for an experienced investor, there's still these line in the sand moments, and they help you psychologically move forward, get towards your goal. And sometimes it's not about looking at the goal, the $500,000 per student for these expensive colleges. It's more about taking the baby step, because that compounds, and it compounds on many levels. And one of the most important ways it compounds is your own momentum, my own momentum. I took the step. I have momentum myself now because I'm going to follow up that 5K. I'm going to put more and more and more and more over the years. And so I'm really happy with that. And that was one reason I want to share the story. The other reason, though, quite frankly, is I wanted to educate, share with the community why 529 makes sense for me and my family for this application, even though most of our assets are held in an individual structure, because I want to be able to use the dividends at any time to pay bills now, immediately. And so it just differs based on what you're looking at. But I want to share something that's a little different than what I talk about on a day-by-day basis. And also I wanted to share this because I don't know if you guys would have ever guessed that I am willing to pay for financial advisors when it makes sense. And for dividends, again, it doesn't. But for other products, other areas of our life, there's reasons. And so when you're at home, you're thinking about your strategy, don't always just assume, I'm going to do it the way I heard someone on the internet do it, or I'm going to do it just one way. Keep your mind open to the bigger possibilities. But I want to bring it home again, going back to dividend stocks, project stocks, line in the sand. Great mind trick for experienced investors, but also newer investors as well. Now, I want to share one more thing before I leave today. very, very soon here, I'm going to be holding a meetup in Sacramento. And so I hope on the late notice that folks can make it. Represent your city, Sac Town. I am going to link in the description below to my local crew. It's called my local Bay Area crew. But let's call it now my local kind of California, NorCal, SoCal crew, California crew. Please, if you're in Sac City, Sac Town, anywhere up there, Roseville, Rockland, El Dorado Hills, West Sac represent, Elk Grove represent, Granite Bay, any of these areas, sign up, and we'll see if we can make this happen. Even if I just get 1 or 2 of you, this meetup, sign up immediately, because this meetup is happening soon, and I want to see if I can do it. I have a kind of last minute reason for business to be up there, and I'm going to try to fit in this meetup, and so I hope we can make it happen. If not, we'll make it happen next time. But Sacramento folks, I love you. I look forward to hopefully connecting with at least 1 or 2 of you. It'd be a lot of fun. I'll link in the description, but if you've seen some of the recent videos, you know we have a lot of fun at these meetups, a lot of knowledge exchanged. And so thank you for bearing with me, by the way, on these thug lifestyle videos. I know doing it in the car, true OG thug life, not polished, but it is what it is, better than no video. And so I want to share some things that I'm going through right now in my personal financial planning. Hope there's some knowledge out there that applies to the greater community. I love you all. Please give me a thumbs up, like, subscription, comment. All of that means the world to me. I love all of you. Before I leave today, in terms of full disclosure, I am long Chubb, ticker symbol CB, Apple, ticker symbol AAPL, PPL Corporation, ticker symbol PPL, AbbVie, ticker symbol ABBV, General Mills, ticker symbol GIS, and Clorox, ticker symbol CLX. I own those stocks in my personal dividend stock portfolio. In terms of a disclaimer, I'm not a licensed investment advisor. Today's video is not investment advice. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Just sharing my journey here on YouTube for your fun and entertainment. I love you all. I will see you all in the next video. Put in the comments below what you think about 529, what you think about the huge cost of college these days, if you think college is good or bad, what you think about just getting started, letting the analysis paralysis go, and what you think I'm prioritizing getting money to work over beating the market, over timing things, over being perfect. But you know I'm a perfectionist. You've seen my financial analysis. I'm going to have another one coming out real soon. I'm thinking of putting a 43rd stock. Before I add the 43rd stock, I need to finish up some analysis that I'm going to share with all of you, so you know I do that too. But we'll see. We'll see all the good stuff in the next video. All right, everyone. Have a wonderful day.